East African anthem next. This is where University of Well survived. Thank you very much. Let us remain standing for a word of prayer to be led by William.
Father in heaven, we come before you. We place this day in your hands. Thank you for bringing us this far. We ask, Lord, that as we begin the deliberations on matters that are central to the economy, matters that are central to the financial sector of Uganda, you come in our midst. Bless us, bless the presenters, that what we discuss will be for the greater good of this country and for you. In Jesus' name I pray.
Amen. Thank you very much. May please be seated. My name is Patrick Ezaga. I head the Communications Department at the Protection Fund, and I'm going to be your moderator of this brief but very important interaction, ladies and gentlemen. On this note, first of all, the CEO and the leadership of the fund, and our dear guests and colleagues, I'd like to welcome you very, very much to this event. Who would like to share with us what your expectations for today would be? Thank you very much. There's a hand on the right.
For me, in India, DPF is like 30 years old when I joined banking in 92. So it is good for me to know what progress has happened in the last 2-3 years and how we can go back to our branches and banks and implement some of the directives, learnings that we get. In fact, the gentleman here is was my ex-colleague, so I'm so happy to know that he's also in DPF now. So if there's something I can reach out to you through him. So I'm so happy. So for me, when I go back, I want to understand what we need to do next steps, because we did lots, when we started off last time, we need to put the posters, and there were so many things, and we've achieved a lot of things in the last 2 or 3 years. So we need to look at the next journey from here and how we can get all of our customers to meet the expectations of DPF. There is some bit of gap that we need to work together. That's what I would like to look at from when I go back from here.
Thank you. Thank you very, very much. You know, for the non-believers, you see how things are now working. The guy who believes us the mic is the former colleague. It was not planned. We did plan that, it just happened. Thank you very much for that. I think you're in many ways saying what we also thought we should achieve today.
And to add on to the former speaker, my expectations is, of course, to know the progress. Since we last met, I think it was 2019, we need to know you had given us mandates and what to do, and then also the quarterly updates to customer deposits and sending reports to DPF. We need to know the progress. What can we do better? Because we have challenges on updating updating customers' accounts. So we need to know how can we do and what can we do better as we go back. Thank you.
Thank you very, very much. Ladies and gentlemen, please appreciate the two. I think If it was not for any reason, I would have suspected that you were part of our planning meetings, because you cannot bring out expectations as precisely as you've done, and you did have a mechanism. I think you're wrapped up very neatly. Thank you very much, and my dear CEO and my colleagues, you heard from the participants. And as you have seen, I also picked them randomly. They were not pre-prepared, so we cannot claim that this was being discussed. What is important is that what you were expecting is exactly the reason for which we organized this interaction, which, as you know, needs to be happening more frequently because of the sector that we're engaged in. So on that note, I now like to take a singular honor to invite the Chief Executive Officer of the Deposit Protection Fund of Uganda, Mrs. Julia Obiet, who is going to give us our keynote address for today and eventually also open this workshop officially. So, Madam Julia, you're very welcome to talk to your most primary stakeholders. I don't think there's any other stakeholder group we have other than yourselves. You're welcome.
Thank you very much, Patrick. I'm always at home being amongst bankers because I started my career in the Bank of Uganda as a bank supervisor. So I moved around all the banks at the time I left supervision. So it's always comforting and an honor for me to be amongst our key stakeholders at the banks, MDIs and the CIs as well. Chief executives, managing directors, executive directors of contributing institutions, distinguished guests from the contributing institutions, staff of the Deposit Protection Fund, ladies and gentlemen. Good morning.
Good morning.
I didn't hear any response.
Good morning.
Thank you very much. It is with great pleasure that I warmly welcome you all to this engagement. I bring you warm salutations from the board of the Deposit Protection Fund, from the management and staff of the fund. In a special way, I'd like to thank you for your presence here today, because we all know what it means to be in the private sector and how the pressures on you are great. You need to hit targets at both lines of the income statement. We're looking at the top, the middle, and the bottom. So we appreciate that you're here with us today. You constitute a core aspect of our stakeholders, and it is therefore pertinent that we have such a routine engagement. But before I proceed, I'd like to thank all of you for paying your premiums on time and for always being very active when we call upon you to participate in various activities that we have. Ladies and gentlemen, the primary purpose of our gathering today is threefold. The first one is to take you through the role and mandate of the DPF. I know that we have done this before, but like my colleague said, in 2019, so we need to keep refreshing ourselves every now and then. To update you on the developments of the fund, and my colleague from Diamond Trust Bank has already stated that. We want to know how far we have gone since the last time we met, and to provide a platform through which we can receive feedback from you, because that feedback is important if we are to keep improving on our output to you and to the sector. Ladies and gentlemen, the fund recently conducted a baseline awareness survey. And the results of the survey indicated that most of us in the contributing institutions have a very limited knowledge of the Deposit Protection Fund, its role, its mandate, how deposit insurance contributes to financial sector stability. It is therefore our hope that at the end of today, and the interactions that we're going to have with you are going to equip you with knowledge so that you can share with your colleagues back at home and facilitate the process of giving information to your depositors and indeed the public at large. On that note, ladies and gentlemen, permit me to share a a synopsis of how the DPF began. The DPF started within the Bank of Uganda, and it was put in place more than 20 years ago. But by that time, it was a fund or an account into which you contributed the premiums. It was operating as a desk within the supervision function of the Bank of Uganda. But in 2016, a lot changed, and we had the FIA being amended to make the small DPF become a legal entity with its own board, management, and staff. And therefore, ladies and gentlemen, in 2017, the Minister of Finance, Planning and Economic Development inaugurated the first board of the Deposit Protection Fund. And as I stated earlier, we started from the Bank of Uganda, and therefore the board identified 11 staff from the Bank of Uganda. The Bank of Uganda was gracious enough to release those staff. And so the 11 staff had the mission of starting the operationalization process. Today, as I speak, we are now outside the Bank of Uganda, and our offices are Lodell Road. Many of you might know the Ministry of Health, so we're just opposite the Ministry of Health premises. We have also finalized the operationalization process, and we now have 48 staff, many of whom, or some of whom, are here with us today. And ladies and gentlemen, allow me to now introduce our senior management team. I will start from the extreme end. We have Mr. Moses Appel, who heads our HR and administration. Mr. Balam Sempala, he heads our IT. And then we have our young doctor, Dr. Michael Mugemwa, who is head of our finance and operations. He's always in touch with you because of a single customer being compliant. I'm sure many of you have talked to him or interacted with him in one way or the other. And then we have Mrs. Angela Chinyapire. She heads our legal and board affairs department. We have Alan. Alan is the CFA. Those of you who know what that qualification means, Alan is with us. He heads our investment department. So rest assured that your premiums are being invested in the most prudent manner. And finally, we have Mr. Patrick Izaga, who has already interacted with you and who is holding the mantle of ensuring that we extend our public awareness across the nation. Ladies and gentlemen, the fund was established as a deposit protection scheme for customers of financial institutions licensed by the Bank of Uganda. As I speak now, we have 34 contributing institutions made up of 26 commercial banks, 4 credit institutions, and 4 MBAs. The fund ensures that depositors of contributing institutions are paid up to Uganda shillings 10 million in the unlikely event that their institution is closed for liquidation, and I must say that this would be involuntary liquidation. We've seen an example of African Bank where it has been voluntary liquidation. In that case, the DPF doesn't come in because the bank has all the money it needs to pay the depositors. We come in if the Bank of Uganda has been forced to close an institution, mainly because the depositors' funds are not being utilized for the purpose that they were supposed to be utilized for. So at this insurance limit, which might look small, ladies and gentlemen, we are covering up to 98% of the total deposits in the sector. Like other deposit insurance entities around the world, DPF is a member of the International Association of Deposit Insurers. This association is headquartered in Basel, Switzerland. Following the global financial crisis in 2007-2008, the association released 16 core principles of deposit insurance, and these were intended to ensure that deposit insurance is strengthened and therefore financial sector stability across the globe is also strengthened. And indeed, it is after that time that a lot of DPFs that were sitting within their respective central banks started getting out and becoming legal entities that are facilitated and strengthened to provide effective deposit insurance. Out of the core principles, core principle 10 addresses the need for public awareness. And this is the reason why we are here today. DPF is also a member of ARC. ARC is the African chapter of IADI, and I'm pleased to note that our Uganda serves as secretariat to that committee. I think you need to clap for it. Secretariat is not automatic. You have to work hard to make sure you get it, and you have to work hard to make sure you maintain it. Ladies and gentlemen, in line with the mission of fostering public confidence through protection of depositors in institutions regulated by the Bank of Uganda, and in execution of its role in creating extensive public awareness about deposit insurance, the fund undertakes routine engagements with its key stakeholders such as these. The need for public awareness is critical for a deposit insurance system to be effective. Hence the reason why it's enshrined in the law. It was enshrined in the FIA 2014, and even when the FIA 2004, and even when this was revised in 2016, that provision remained and was even expanded. Today's engagement, therefore, is part of the fund's objective of maintaining strategic engagements with stakeholders, as together we create public awareness on deposit insurance across Uganda. A famous African proverb states, and those who have listened to my speeches know that my colleague Izaga cannot give me a speech when it doesn't have an African proverb, because I think we have a lot of wisdom, and this is the wisdom of our ancestors which we must continue upholding. So the proverb goes as follows: the work of two is not meant to be done alone. Ladies and gentlemen, since your institutions interact directly with depositors, it's important to work together to establish the required synergies and collaborations in order to achieve the desired goal of a highly informed public. It is therefore imperative that you get to appreciate the fund's operation so as to avail you with necessary information to engage and educate your depositors. And I want to say, not only your depositors, the public, because you're always looking at also getting more depositors, new depositors into your banks. On our part, this is a platform to keep you abreast with developments of the fund, as we also receive feedback from you. The fund's role, mandate, and updates are going to be shared by my team that is seated just in front of you. Ladies and gentlemen, on behalf of the board, management, and staff of the DPF, I thank you once again for honoring our invitation and sparing the precious time to be with us. We do not take this for granted. At DPF, we are committed to continue working with you together as we build public confidence in the financial sector. I therefore take the honor to declare this event officially open and wish you fruitful deliberations for God and country. Thank you.
The person who is going to set the ball rolling for us is Madam Angela. Angela, as already mentioned to you, is our head of legal and board affairs. So she's going to set the tone of the presentations, and then I'll let you know. I think there's no need for me to come back. Angela, when you're done, you call the next person. I should not dominate this day.
So this morning we are privileged to have our CEO and African Division, and today we are looking at having a better understanding of who we are, what we do, and how we engage with us as the Protection Fund of Uganda. So today the presentation that we have is outlined as follows. We have various areas that we intend to cover. We are going to look at the background of deposit insurance. Now, just for clarification, when we hear deposit insurance or deposit protection, that is one and the same thing, but we just realized that once upon a time, we got visitors who came in and wanted to regulate the angle of deposit insurance. So we call it deposit protection in Uganda for avoidance of doubt and for clarity, so that people know that we are actually giving protection for the depositors. And yes, it is a form of insurance, but for those who know the insurance for what it is, they assume that it is part of the other insurance that is regulated by the Insurance Regulatory Authority. From then on, we will then move on to the genesis of the Deposit Protection Fund in Uganda. We are going to give you a snapshot of the vision and mission of the fund. We'll also look at the goals and the mandates of the fund. We'll give you an aspect of the corporate governance structure for information, membership and coverage. CEO has covered that, you are here. Then the funding structures, I'm sure you want to know, and the assets. You need to know our key achievements and developments. It has been mentioned that what we do, a lot of it hinges on what you do for us, and that is the premiums and the shares in the reassurance that, as she was introducing my colleague Alan, that the premiums are well invested, so you would like to get more about that. We'll also look at the key achievements and developments that are happening around the different interventions that we have as a fund, and then we'll also look at the ways forward and some take-home messages. I believe by the time we leave here, we should have a few take-home messages that we want to carry with us. So, back to our presentation, we'll look at deposit insurance or deposit protection. What is this? It arose out of the need to protect vulnerable and uninformed small investors. Now, this arose out of the financial crisis that happened in 2007, 2008. I'll give a little bit. Once upon a time, in about that time, I joined the financial sector in a different area, and everyone was wondering, why do you have to come into the financial sector when there's a crisis going around the world? No one understood what was happening then, but for me, I felt this was my intervention to move in at that particular point in time. What did this do? It brought in areas where people were losing money, and then it sat around and they said, no, it is important that we have an intervention that will protect the small, vulnerable, and informed depositors. I like telling people that when you sit with your billions, when you sit with your millions, and the millions that you cover in your bank account, you have the ability to look and understand and appreciate that if I'm keeping my billion in contributing institution A or in bank A and B, then I should have the ability to know that what is my bank doing? How are they performing? And based on that, I'll take interest. I keep telling people that when you look at this period we've just come out of, your financials have been flashing in the newspapers, but I don't know how many people have taken keen interest to understand why those financial statements are in the papers. Read them, understand them, and then you make an informed decision where you want to keep your billion, where you want to keep your million, where you want to keep your hundreds and thousands. So, depositing insurance looks out for the vulnerable, the small vulnerable people. You with your million, you have the ability to read those financial statements, to understand and know your bank and appreciate what they are doing. So, arising out of that, they realized that there was a need to have and protect these small depositors. So deposit insurance or protection grew out of that. You realize, and we have an example of if there is no protection, what can happen? We have a picture there of Northern Rock. That is what can happen if there is a crisis. crisis in the financial sector. And let us be not deceived that this thing can happen in one bank and it will not affect the next bank. I will give an example that once upon a time we had a bit of a crisis and people were running into one bank that will remain nameless to withdraw their savings and monies. But I want to look around this room. Did it affect any of your other deposits? I'm sure people, you had to give and keep giving reassurances to your depositors that your money is safe, there is no problem, and everything is well. And the Bank of Uganda has done a good job in reassuring that this is something that you, deposit protection wants to guard against. You do not want people coming and lying, because if such a thing happens, what we call a bank run, if it happens in Bank A, it will definitely have a spillover effect in Bank B. Because I can imagine if I hear that Bank A is going down, and I also have deposits in Bank B, I'll move from Bank A, pull my money, and also move from Bank B, pull my money, and where will that money end up? It will end up under my bed, in the pot, and maybe in the anthill. I'll give an example, and those are things that we do not want to happen in our financial sector. We're dealing with someone one time, and the person was saying, you know, I've kept my money very well. And so the person went to pick the money and says, I think we can help you out in this point time. And the person goes to the suitcase under the bed. I do not know how the termites found the money there, but he came back with shreds of money, of pieces of paper, and that was the money that he had. It is a true story, I'm telling you, a faith. And I've never forgotten that story, never even the person I know. But what are we doing? What we are looking at is deposit protection is to give people reassurance that their money is safe wherever it is. And that even if a bank goes under, then there will be safety for their deposits. This started also in an international perspective. CEO has talked about IADI, which is the International Association of Deposit Insurance. Now, she also mentioned that it is a global standard-setting body that deals in deposit insurance. The headquarters is in Switzerland. It has 85 members, 8 associates, and 16 partners. And it was established in 2002 to enhance the issues relating to deposit insurance and protection across the globe. So what they have done is they have put together 4 principles that guide deposit protection or deposit insurance. So you have the 4 principles for effective deposit protection and insurance systems. Those were done in 2009. But they set standards for us that guide how we do our work. Now they give us guidance on how we should govern the issue of deposit protection and give us mandates how we do it, public awareness, you had the public awareness we were talking, and also gives technical training to help people, because this is a new area that not very many people are aware about. So it helps people have a better understanding. So DPF was admitted to IADI, because IADI in 2018. And one of the core areas that IADI gives is that you give the 4 levels of mandate. We have what we call paybox, and that is an institution goes under, and the deposit insurer, if they have only that mandate, their role is just to play, and just to pay. Then we have the mandate of paybox plus. The deposit insurer has an extra role, not just paying out, but additional responsibilities, such as liquidation. Now, on top of just paying out, when an institution is distressed and has gone through liquidation, then they give an additional role of not just pay, but can also be appointed as such, which is a liquidator. Then we have loss minimizer. The deposit insurer actively engages in different strategies to ensure that you minimize the losses that will happen And what that would be, part of it is you could even put in some money to resolve so that you do not have the institution going into liquidation and it is marketed well only to be sold or to another company. We have a risk minimizer where we have resolution powers. Now allow me to then move into what we do in Uganda. It has been mentioned, and from the different areas that we've mentioned, I think we can now place where Uganda falls, or where the Coast Protection Fund of Uganda falls. We fall in the point where we are paying both class. We can be appointed as a liquidator by the Bank of Uganda, and we also get involved in paying out. Now, the fund was established in 1994, as was mentioned by the Financial Institutions Statute then. It has been rebaptized the Financial Institutions Act. And in 2016, there was need to move it out of the Bank of Uganda, and that is in line with best international practice. It was pulled out of the Bank of Uganda, and that was provided for by Section 108 of the Laws of Uganda, that is in the Financial Institutions Act. So based on that, what they did do, that created and gave a mandate as a body operate, capable of suing and being sued in their own right, but also giving the sole responsibility of handling the issues of deposit protection in Uganda. We have a mission and vision that guide the fund, and we will note that we have our mission and vision packaged in strands of 5 years. The 5-year session comes to an end in June this year, but based on that, our board has put in place a new vision, a new strategic plan and new strategic objectives. If you look around the room, you'll find them, and please take them quite serious. So our mission, and that we stick to, is excellence in deposit protection for financial sector stability. And then we also have a mission to foster public confidence through protection of depositors in institutions regulated by the Bank of Uganda. And when you see us right. Right stand for our values, which are mentioned as respect, integrity, transparency, and excellence. So whenever you see anything that arises from the Deposit Protection Fund, look at it as right. Our strategic objectives for the year going forward, starting July and up to 2017 June, is that we still enhance public awareness, as has been mentioned. That is a key role that comes out from the IIT core principles and international benchmark. We are looking at growing the fund to a bigger fund size. My colleagues will mention where we are at now. And then we also want to look for readiness to pay out. Internationally, they say 30 days. But for us, we are looking at between 7 to 30 days. We should be able to pay out in case the bank is closed by the Bank of Uganda. And then we are looking to have an enhanced mandate in deposit insurance. As we note that our law is not all inclusive. There are certain areas that need to be plugged and strengthened. So what we are looking at is improving that mandate, and we are looking at having a new law, standalone from the Financial Institutions Act. Reason being that going through a law amending process or a law change process is cumbersome, and so if we have amended our law now, we assign this stream with the Bank of Uganda, and the two mandates are different. So tagging alone becomes a bit of a challenge. So we are looking to having an independence in relation to the mandate and coming out of the Financial Institutions Act. We are looking at ensuring that the board and the staff are are adequately skilled and have the right competencies and knowledge. And we also looking to have a stable, motivated, and engaged staff. I think if you look at our colleagues and the people around, people look motivated and they're quite engaged. We have a very vibrant team of coming to 50 members of staff. The roles that are provided for the DPF under the law, we pay depositors of protected deposits in the eventuality of the closure of the financial institution. Like I mentioned, can act as a liquidator if appointed by the Bank of Uganda and perform any other duty as may be assigned by the board. So our roles is we need to be aware that we contribute and are very key to financial stability by ensuring that deposits are protected and depositors are aware that their deposits are protected. And in the law, that's why you find that in all of your institutions, there is consistency that the depositors should have within your banking halls and any area that touches upon the financial institution, there is something that mentions about the protection of the depositors. It is something enshrined in the law, and when you go back to your offices, just ensure that you have all your documentation up there related to the Deposit Protection Fund. That is why you have our posters there. If you don't have enough, our head Holmes is at hand with his team to ensure that every financial institution is adequately covered with the reassurance to the depositors that their funds are protected. And then also, we are looking at paying out as fast as possible if there is need for a payout. We'll talk a little more on what we are doing in areas relating to payout. We are strong in corporate governance, and that is enshrined under the law. So what does that do for us? We have a 7-member board, and how is that constituted? I would request that we have a 7-member board. And please show us the next slide. Yes, I'm sure there are familiar faces there. 2 of them represent contributing institutions. We have 2 who represent the public interest, and then we also have the board charter that governs their operations and their code of conduct. And as has already been mentioned, the starting point is we had 11 staff who were seconded by the Bank of Uganda, and now we are a team strong to about 50 members. We have a management team that is seated before you, and just to give you a feel that a highly and well-motivated and mandated strong management team to ensure that the mandate of the fund moves forward under the guidance of an able board. And we also have staff, that is us, and a big group, the mixture of the board, management, and the staff of the fund. Thank you very much for listening to me, and hand over to my colleague to take you on from there, Dr.
Thank you very much, Angela. I also take this opportunity to welcome all of you to this engagement. It's a very important engagement. It enables you to appreciate the role of DPF, and we also understand where we need to work with you and how this will be partner. So you're welcome to this engagement. So I'll take up from where Angela has ended, and I'll start with membership and coverage. CEO briefly highlighted on this. Membership to the fund is compulsory. And here we look at all institutions supervised by Bank of Uganda. So if you're a financial institution supervised by Bank of Uganda, then it is compulsory to be a member to the DPF fund.
or to the Deposit Protection Fund. Currently, there are 35 members to the fund. Here we have 26 commercial banks, 4 NDIs, and 4 credit institutions. Our current deposit protection limit is 10 million per depositor per supervised financial institution. This implies that if you are a depositor and you have 3 accounts in bank Y, one account maybe has 10 million, another account has a balance of 5 million, and maybe another one has a balance of 5. So total is 20. So we aggregate all those accounts in that institution that you have a depositor, and we can only pay you up to a maximum of 10. So it is per depositor, per institution. The protection limit was previously 3 million in 1997, and this was revised to 10 million in September 2019. And later on I will discuss the rationale for revising this limit and the fact that we considered in moving from 3 to 10 million. I will now move to coverage. Coverage is a very important parameter for DPF, and whenever we talk of coverage, we mean deposit coverage and effective coverage. And under deposit coverage, we basically look number of accounts fully protected by DPF, and we also look at the total value of deposits protected by DPF. So those two are important KPIs for deposit coverage. And when we are looking at these KPIs, we try to benchmark or we compare them with the East African Monetary Affairs Committee set benchmarks. So we compare what DPF has compared to the set benchmarks, and then we are able to evaluate whether we are progressing well or we need to do more to improve our numbers. So, based on the statistics for March 2022, and keeping our limit at 10 million, the number of accounts fully protected by DPF as of March 2022 were 98% of the deposit accounts. So 98% of the accounts were fully protected as of March 31st, 2022. And this is 19.6 million accounts out of 20 million accounts. So this basically means that as of that date, 98% of the accounts had balances of 10 million and below. Now, when we compare this with the East African recommended benchmark, which is 90, so you can see that DPF, we are above the standard that is put in place by the East African Monetary Affairs Committee of 90%. Deposit coverage can also be looked at by considering the total deposits or the total value of deposits protected. So as of the date of 31st March 2022, the total value of protected deposits was 17.8% of the total deposits in the sector. So 17.8% of the total deposits in the sector were protected. And this is around 5.7 trillion out of 32 trillion, which was the value of the deposits as at that date. So this 17.8% is definitely above the 10% benchmark that is put in place by the East African Monetary Affairs Committee. So it means that in terms of that parameter, or in terms of that KPI, as DPF, we are doing better. Then lastly, we have the effective coverage, and here we are looking at our fund size. We are looking at our fund size of DPF. So still, as at 31st March, the fund size of DPF was 1.05 trillion. And at that fund size, as DPF, we are able to pay of 18.4% of the total protected deposits in the sector. So considering the total protected deposits in the sector, which was 5.7 trillion, and keeping in mind our fund size of 1.05 trillion, we are only able to pay 18.4%. This is slightly below the 20% benchmark that is recommended by the East African Monetary Affairs Committee. So in terms of this KPI, we are still below standard, and that's why we continue getting premiums from the contributing institutions to ensure that we grow the fund size. We continue investing the funds prudently to grow the fund size, so that we are able to exceed the benchmark, the 20% benchmark that is recommended by the East African community. I will now move to the funding and asset structure. Here we are looking at what are the major sources of income for DPF. DPF generates income from two major sources. We generate income from premiums, and we also generate income from investments. So starting with premiums, under premiums, we generate annual premiums based on the average annual deposits of the contributing institutions, or of the contributing institution at the end of the financial year. So we levy the 0.2% of the average deposit liability of the contributing institution of the previous financial year. So usually, the financial year for each of the CI is December. So we usually bill around within 4 months after the end of the financial year. And this premium is supposed to be paid within 21 days after you have received our notice. Usually when we exceed 21 days, we begin levying what we call a simple penalty, some kind of interest, which is usually 0.5% of the amount outstanding and the number of days it is accruing. So this is paid annually. We also levy what we call the risk-adjusted premiums. So here, basically, BOU conducts quarterly inspections or quarterly on-site inspections for contributing institutions, and in each quarter they rate the institution, either marginal, unsatisfactory, fair, or satisfactory. So if an institution is rated marginal, then as DPF we shall charge an additional premium of 0.1% of the average quarterly deposits for that quarter. And if you're rated unsatisfactory, then we shall charge an additional 0.2% of the average quarterly deposits. So this amount is also supposed to be paid within 21 days. And if you fall on the 21 days, we usually charge still a simple penalty. So basically that is the income we get from premiums. We also get income from investments. As a fund, we invest in government securities, basically the treasury bills and bonds. So once we get the annual premiums, we invest the money. We have an investments department, a very strong investment team, which ensures that your funds are invested prudently to maximize returns on the investment and to grow the fund size. Once our fund size grows, then this will increase our effective coverage. As I indicated earlier, we noted that our effective coverage has not reached the benchmark which is set by the East African Monetary Affairs Committee. And this is partly affected by the size of the fund. So we need to invest very prudently to ensure that we maximize our returns and be able to grow the fund size. And this is very well handled by our investments department. I will now move to rationale for change from 3 million to 10 million. Previously, our deposit protection limit was 3 million, and this had been set in 1997. So this was revised in September 2018 to 10 million. So we need to understand what informed the change, what factors were considered in arriving at the 10 million, just for information purpose. So we will note that there were a number of significant changes in the economy between 1997 and around 2018. The banking sector had grown. There were so many changes in the economy, and this definitely warranted a reassessment of the adequacy of the limit. We also noted at that time that aggregate deposits in contributing institutions had grown from 565 billion in 1997 to over 20 trillion in September 2018. We also noted that the exchange rate had depreciated with the value of the dollar standing at approximately 3,700 in 2018 compared to 1,000 in 1997. Definitely, this implied that at the deposit protection limit of 3 million, which had been put in place in 1997, the equivalent in dollars was 3,000 at that time, and in 2018, at the exchange rate of 3,700, the 3 million Uganda shillings had now reduced to 810 based on the exchange rate of 3,700. So that was also a very important factor. Other factors we considered was one of them was the protection limits within the East African community, other countries around East Africa. And at that time, we noted that Kenya was in the advanced stages of raising its protection limit, and they were raising it to about 17 million at that time. And we also considered the ability to pay out protected deposits in the CIs based on the fund size. So we also put into consideration the fund size in 2018, and keeping all those factors into perspective, as a fund, we arrived at a protection limit of 10 million, which is still standing as of today. We hope to increase this limit. We hope to review it every 5 years, and we hope to increase it based on definitely the same factors, and most importantly, the growth in our fund size. That's why we continue asking for premiums so that we are able to increase the protection limit. Thank you very much.
Thank you, Doctor, for that presentation. I'm here to take you through the achievements of the Deposit Protection Fund. As you're aware, the fund has been in place as an independent entity from 2017. That's when the initial board was appointed. The first staff came in June 2017, and then those are around 4 staff initially, who kick-started the operationalization process, developing a few policies here and there. And then another team joined them in 2018 to come up with 11 staff, initial staff seconded from Bank of Uganda. And from then on, the fund has been growing and achieving several milestones, which I'm here to take you through. First of all, one key item is the legal framework. For the Deposit Insurance Fund to be effective, it needs to have a legal framework to support, which comprises of comprehensive laws to support its operation. If there are some significant inconsistencies in the existing legal regime, the fund may not be able to support and deliver its mandate as required. So because of that, we have been developing quite a number of laws. The first one I would say is the Financial Institutions or Deposit Protection Fund Regulations of 2019. And the objectives of this one was, first of all, to outline the administration of the fund, how the fund is administered, contributions to the fund, how allowable investments, the premiums we collect, what are we allowed to invest in. It's not just anything around there. Penalties for non-compliance for contributions, and as well as I talked about, and as well as those are to mention some of them. Then next of all is the Financial Institutions Protected Deposit Instrument of 2019. This one is the objective of this was to outline or present to what extent a deposit is protected by the deposit protection, the consumer deposits. We also have a Deposit Protection Bill of 2020. That's the most recent we have. Another achievement we have is human resources. At the moment, as we speak, we are around 48 staff, from the initial 4 to 11 to 48. The most recent recruitment being in May 2021, where the bulk of the staff came, the actual staff who are not seconded from the bank, but over time, the rest joined them. And during this time, the fund has also been developing policies, just like any other organization. It requires policies to guide the operations. So we have been developing policies in investments, policies in IT, policies in administration, human resources, and various areas which are required by an institution to perform. The CEO mentioned the International Association of Deposit Insurers, which is an international forum for deposit insurance, global. She mentioned where it's headed. And this association is mainly there to provide guidance and international cooperation to deposit insurers. They talked about the YADI core principles, which also helps support institutions or countries which want to develop their own deposit insurance, as well as those which already have, how they can enhance their operations. So Deposit Protection Fund joined the YADI in 2018, and since then, as a full member, previously before, it was Bank of Uganda, which was an associate member, but now Deposit Insurance, upon the institution of Deposit Insurance, it became a full member of YADI. Business automation, we are trying to automate. These days, everything is going IT, so to increase efficiency, we have to automate several of our processes. For example, premium collection and billing. I'm sure those who are mentioned computing and submitting new premiums and account details are familiar with that. Single customer view, which our partners, the contributing institutions, have been facilitating and helping us to implement, because this is a system which will facilitate payout of deposits in the event of closure of a bank. So customers are required to update their records, including NIN, national identification numbers, to facilitate this process. Next, we have public awareness campaigns. As the CEO mentioned earlier, IDADI core principle number 10, very critical. Deposit insurers, for deposit insurers to be effective, they have to participate in ongoing public awareness campaigns. And this helps the public to know that their deposits are protected, and it also contributes to financial sector stability, which is one of the key contributions of the Deposit Insurance Fund as a member of the financial safety net, financial sector safety net. And we have had many sensitization meetings. Some of them are like this. We had one with the media, I think a week ago. We have had various sensitization and town hall meetings in different parts and regions of the country. International Association of Deposit Insurers, the African Regional Conference. This is one of the, I would say one of the key items. This shows how much the Deposit Protection Fund of Uganda has achieved. We hosted this in 2019, September, and that was just 2 years after inception of Deposit Protection Fund as a separate legal entity. That shows the confidence that our partners in the region have in the Deposit Protection Fund of Uganda, as well as the confidence the International Association of Deposit Insurers have. Because this is not a small event, it really encompasses all deposit insurance entities in Africa. We have those from international organizations coming to bless the event. And it was very successful. It was held at Speak Resort Munyonyo, and the theme was, why deposit insurance? So there were, since deposit insurance is still growing within the region in Africa, we had invited even those countries which don't have that. And with that theme, we wanted them to know the importance of deposit insurance, as well as for those which are experienced, they would share their experiences in deposit insurance with those which are planning to implement. Professional development programs, deposit insurance is a new area in Uganda, but not only in Uganda, but regionally. And so we have to have the competence to deliver on that. And so we usually ensure that our staff are well trained in deposit insurance, and they should be able to disseminate to the public any matter regarding deposit insurance. Strategic partnerships, see those abbreviations, I'll just tell them. There's KDIC, which is Kenya Deposit Insurance Corporation, then Zimbabwe Deposit Protection Corporation, Nigeria Deposit Insurance Corporation, and Bank of Uganda. All these are part of the African Regional Conference, as well as the YADI, and these partnerships enable us to compare notes and know how we can improve. The Deposit Protection Fund of Uganda is the youngest in the region, almost, if I say, among those. So we usually have those strategic partnerships to compare and share from their experiences. Corporate social responsibility, just like any institution, we have to be socially accountable to ourselves, our stakeholders, as well as the public, and also have a positive impact on humanity. So as Deposit Protection Fund, we have engaged in quite a number of corporate social responsibility. Okay, we can say this will show you the first photo on the top right or top left. There, that was during the peak of the COVID pandemic, and we made a contribution to. On top right, top left is to Ministry of Health to support them in their efforts against COVID. Bottom left, that is, it was a contribution we made to Mild May Uganda, also during the peak of COVID, and that is to help them in their efforts against COVID. And then on the right there, where you see Patrick, the CEO, that was a contribution to St. Jude's Children's Hospital, no, Children's Home, rather. It's Children's Home in Gulu, and they look after vulnerable and orphan, vulnerable children and orphans. So we made a contribution to support them in that effort. Approval of chambers, I'm proud to mention that with our legal counsel here, DPF now is a recognized legal chamber, and we got that approval. Investments management, when we took over the fund, we had fund managers doing quite a bit of our investments, but as we speak now, we are slowly, with our head investments, Alan, trying to take over management of investments in-house as an organization, and that will also improve on our efficiency and cost savings towards the funds contributed. And fire awards, it's good for an institution to have good accounting standards as well as disclosure, and the Deposit Protection Fund is proud to participate in the Fire or Financial Reporting Awards. And under this, I'm proud to say that in 2021, we won the Outstanding Achievement Award in the public sector. We have Alan to take us on the way forward.
My name's Alan Wetabe. I'm the head of investments. But I'm delighted to be here with you after it's coming to 18 years for me in the industry. But the reason I'm here today is really just to help hammer in our message as Deposit Protection Fund. We know you are very key as stakeholders, and we value your input. We know you have a large reach. A lot of people interact with you. And so we prepared some messages that we believe are core and important for you as key takeaways from today. So I wanted to just share a couple of things that I feel are important for us to hammer in. And if there is anything that we are taking away from today apart from the breakfast, which was very nice, it should be these other things. The first one is that our depositors in institutions, contributing institutions regulated by Bank of Uganda, are protected by Deposit Protection Fund. I think that is a very important message, that if you find a family member or anybody ever asks you, that is a message that we hope you can relay. We are aware that the Bank of Uganda is now regulating more activities. The National Payment System Act came through, and now mobile money is a regulated activity. There are conversations on how those funds will be managed and the protection that they will have. It's not yet our mandate. We are aware that Bank of Uganda again is taking over large circles. And again, there are conversations on how that will be managed, how it will be seeded. We will relay the information when we have more details. But the key thing is that for those contributing institutions, particularly under the regulation of BOE, particularly those under the Financial Institutions Act or the Microfinance Deposit Institutions Act, those depositors are protected under the Deposit Protection Fund. So that's a very important message that we hope you can take home. The second one that I liked our colleagues from Diamond Trust Fund. We wanted to encourage you to display information about DPF. And I know Mr. Isaac will be coming out with some new material. We hope you can put this information in your chambers, in your branches, in your offices. We will share calendars as well. They're usually very lovely. Please display them. They usually contain very interesting information about Deposit Protection Fund. And so please display this information, because it's one of the ways that we can communicate to the public, to stakeholders, demonstrating the importance of the Deposit Protection Fund within the financial sector ecosystem. A very important thing that goes unsaid, and with the proliferation of social media, is rumors. People just wake up one day and write that Alan had an unfortunate event, and it can circulate and reach your mother, who will call panic. We've seen all these messages going around social media. People come and close banks in the morning, and then we all have to struggle to provide information. So the key thing here is that we, as stakeholders in the financial sector, should seek to avoid rumors. The reason we have this team in front of you for you to see is to show you those individuals that you should be able to reach out to if you want to find more details about the Deposit Protection Fund. Please take down their names, connect with them on LinkedIn, on Twitter. If you need quick information, you can write out to them. You can call the Deposit Protection Fund, you can write to us, you can come to the office. There are many channels for communications. Don't engage in receiving and promoting unsubstantiated information. That is key. We know that as a young country, a lot of institutions are not yet strong and stable. And so we are very prone to misinformation and misdirection. So it's very critical that we as professionals know who to contact if we need to get some clarity. And this is why this awareness, this engagement is very critical. And I will encourage you that as we break for a health break, take time to interact, get some business cards, take some phone numbers, some emails. You will never know when you might need to reach out and connect. Another message that I think is critical is about the limit, the 10 million. A lot of people are unfamiliar with that, and as the entities responsible for generating and onboarding customers who take out the products, this is a very critical message that you should be laying out as clear as possible. It's actually vitally important when you are dealing with customers up country, because a lot of them fit squarely within our 10 million cover, and they will be very interested in having this information. And so we encourage you to share our information. As you can see from our boards, that message is very clear. And as we have said before, display this information also in your premises. For our colleagues that are not a non-Ugandan, or if you're in Uganda and you like to have foreign currency denominated accounts, we are happy to tell you that you are also covered. The only challenge is that we will have to calculate your cover in Ugandan shillings, the equivalent. So whether you have a rupee account, whether you have a pound account, we will convert that into Uganda shilling, and then, as my colleagues say, it's per customer, per bank. So we will aggregate whatever you have in that bank and then apply our limit. In terms of computation, for when we are paying out, so in the unlikely event that a bank is going through outright liquidation, we would ensure that we identify all the obligations outstanding from this customer of that bank, and then we will net off and be able to pay the net to that customer. So we are mindful about the likelihood that a customer in a bank may have loan obligations outstanding, and in the unfortunate event that an institution has to be closed, still those obligations have to be catered for. So we take care of that, and this is why we are interested in having very high quality data. So before I close out with the takeaways, the last one that is very interesting is we get people coming to Deposit Protection Fund complain about the CI's customer service. It's very strange because we don't know how to help. And so one of the messages that we would like you to help us to take to the public and other stakeholders is that Deposit Protection Fund is not a security agency. We do not handle complaints. We do not handle issues to do with customer service or CIs and whether the manager spoke badly to a certain customer. Those are not areas that are under our purview. And so this is something that we are trying to clarify, and this is why we are seeing our teams to come and speak to different stakeholders, to be able to highlight our mandate clearly, and to be able to cross out any misunderstandings, such as people when they see the word protection, they always think either you are the police or something very close to that. So we really appreciate your help in providing this guidance to stakeholders wherever you might meet them. Good. In terms of way forward, where are we going? Where do you see DPF? And I think this was at the beginning. A lot of you highlighted what you want to see. Many of you interacted with DPF in 2019. It's almost 2-3 years down the road. What has changed? What has changed really for us has been the emphasis around public awareness. We are moving around the country more to speak to different people in their local languages. That's critical, so we're going to Karamoja, you're finding us in Arua, we'll go to Kabale, we'll go to Mbale, and we'll go to the slums. We'll go there to explain Deposit Protection Fund, its purposes, its mandates, and of course, what it can, the value it can offer to a depositor and a saver within the formal financial sector. So our intensity is increasing, and you will be seeing a lot of us. You will be seeing us on radio, you hear us on TV. Or is it you see us on TV or you hear us on radio? Give us the impression. Okay. So you will be seeing us. The intensity is going to increase. Our team is big, our team is aggressive, and the message will be there. Because we know that a sound financial sector is reliant on quality information and transparency. And so that is something that we are going to be emphasizing in the coming years. You also, we encourage you, and I've had this on in your adverts, where you do highlight your relationship with the Bank of Uganda as a regulator and the DPF in terms of the cover, and we applaud you for that. And we encourage you that in your advertising, you put that message center in front. So we are growing as an institution, and my colleagues have mentioned that we are now about 50 staff. And we have a key area that is interesting for us. One of the key things that we are required to do is to confirm the quality of data that you share with us. And we also want to know the institutions that we cover better. And so the thing that we are doing more, and we've started, is joint inspections with Bank of Uganda and supervision teams. So you would be seeing us coming to your institutions once in a while to check, validate, review, engage with you to understand how you onboard clients, how you maintain records, how you amend records, and of course how you comply with the different regulations that we have shared with you. And so don't be surprised when you see a letter from the CEO advising that a team is coming along to visit your institution. So that is something that you're going to see more of in the coming years. We have seen and we've seen from other deposit insurance schemes across the country and in the world, the different mandates that my colleague Angela shared. The Paybox Plus, loss minimizer, risk minimizer. We believe, and when we evaluate our mandate, we see DPF more of the Paybox Plus. But our vision is to extend the mandate to become a loss minimizer. And so there is work that has been ongoing to review the regulatory framework that gives us the powers to do what we do. And so over the last 1 year, we've been working with the Cabinet Secretariat on a paper called the Regulatory Impact Assessment, which is in the final stages and will be presented and submitted to Cabinet for review. And one of the key proposals, just to highlight, is that we are looking to do more. We are currently, our mandate is kind of an undertaker kind of role. We come in at the very end. We are like an undertaker. But we believe we can be a doctor as well. We believe we can be a doctor, so we should be able to come in before and help in the support resolving an institution if it's in trouble. But we need a change in the law to give us the ability to operate as a doctor, not just as an undertaker. But it takes time, and over the next 2-3 years, we will communicate as the progress goes. But that is our vision, to be able to support institutions when they are in trouble and the central bank makes a call. We should be able to come in even before the situation deteriorates to a final point. So that is something that is within our future. Two things are also happening on technology. We are interested in automating the way we receive information, the way we maintain information. You notice that Uganda is changing. A lot of people are receiving salaries, are engaging with the financial system through mobile phones. So that is also a view that we are taking on board, and so we have to enhance our systems and our abilities to be able to pay back in that way. But for us to have better systems and abilities to pay, we need to automate. So we are working towards automation of most of our core systems. But also we need quality data from you. And we hope that we all can move away from receiving forms and Excel worksheets to receiving this data in a smarter way and of high quality. The better the quality of our data, the easier it is for us to engage and pay out as required. And it also helps us in understanding the institutions we are working with in the event that there is a situation that needs to be managed. So technology, automation is very critical for us. So finally, in terms of way forward, we are looking to make engagements with CIs a regular feature. And our proposal is to meet at least once or twice a year with your chief executive officers of CIs and the chief executive officer of the Deposit Protection Fund. We believe that if we can have high-level engagement and regular contact, that will foster a better working relationship between the CIs and the Deposit Protection Fund. And so over the coming weeks and months, we'll be coming back to your CEOs to start creating a framework that will result into regular contact at the highest level. And we know when that framework is put in place, a lot of the working arrangements will improve. So those really for me would be the key things that I would like to share today. And I hope our key messages have landed home and they have landed on fertile soil. We hope we've been able to communicate, and if you still have a question, please, we are still available. We were able to take some of these questions in the Q&A. So thank you very much for listening, and enjoy the rest of your Friday. Thank you.
Ladies and gentlemen, you may have noticed that on this side, there's one person who has not come up, and it was deliberate. Among the many issues that have been shared with you, there is the aspect of the payouts. Now, the payouts is very critical, and we thought that we need to take this just a notch higher, very briefly, and that is why we reserved our head IT, Balam, to come and just give you a snapshot of where all this is heading, because many of you are going into compliance and so on and so forth. So this is important for you to know.
My name is Balam, as you have already heard, and I'm in charge of the IT department at the fund. As you may all believe or agree with me, IT has now taken the front seat, and just not sitting, but making sure that things are happening the way they are supposed to happen, that automation is taking place, and that businesses are appreciating the value that it is putting in to make sure that systems based on IT, on technology, are able to enable the operations of the organizations. This morning, I want to share briefly with you an overview of how far we've gone with the auto and premium management system. Now, this project has two main components. It has the payout component and then the premium and premium management system component. The payout is to facilitate the fund to make sure that the fund is able to pay in time and to pay the right amounts of monies to the depositors in the unlikely event that one of the contributing institutions is closed by Bank of Uganda. So there is that leg of the payout, and then the other leg of the premium management system, which Doctor has actually talked about, of being able to manage premiums that we collect from the institutions. So the project kicked off, and we went through the implementation aspects. We had engagements with the pilot institutions. We actually selected 3 of them. That is Absa Bank, Pride, and the Finance Trust. So we have engaged them in the project, and we were able to connect with them to set up the remote connectivity, and then we were able to train with them, and we were able also to do UAT exercise. That is now the testing of the system. And all that happened in the space between April, when we had the workshop, and November, when we had the UAT exercise. That's now the testing of the system. Around December, we are now monitoring the system, and that's called the stabilization period. We are able to monitor the system. There are issues that came up, and we are working with the vendors to make sure that we resolve or we address those issues. Now, we are planning to roll out this system to the rest of the institutions. However, before that, we also have a phased approach that we want to use in the rollout. So we are still working with the pilot teams, those 3 banks, to make sure that everything is okay. And then after that, we shall roll out. And this pilot phase is what we are now going to start in June, this coming month, to engage the 3 pilot contributing institutions. And after that, come July, August, September, we shall be rolling out the system to the rest of the institutions in the country. Now, we will need to train members from the participating banks. We shall be training you. We shall be communicating with your executive, the MDs. We shall be also engaging quite a number of you and your IT people to make sure that we set up your systems and connect to the payout system, and then get ready to use it. So this is briefly what we are working on, and we plan to have simulation tests after we have rolled out the system and the users have used it, are familiar with the system. We shall be conducting a simulation test just to try it out and have that kind of assessment, and be able to guarantee that we have a system that we can use in case there is a payout that is likely to happen. So this simulation exercise is planned to happen in the second quarter of the next financial year. That's around October, November. We will be again approaching you and requesting you to join us to do the simulation tests. Now, all this has happened. Of course, Bank of Uganda has not been left out. We also have systems that we want to connect to the payout system, which systems are hosted at Bank of Uganda. So we have also brought them on board, and we have been working together with the Bank of Uganda to make sure that the system is able to connect to their systems. We have also talked to NITAU because, as you may be aware, NITAU has a hub where we can get a database of the depositor information. So we have been in talks with NITAU, and we are planning to connect, to interface the system, the payout system, to NITAU UG Hub, where we can now verify, to validate the depositor information, like now their name, their telephone numbers, and a few other things that we need to get from them. So NITAU has also provided that service. The telecom companies that we are working with for now, the big ones, MTN and Airtel, we have tested the interconnectivity, and we have also tested the interconnectivity, and we have working with them, MTN and Airtel, to make sure that they are able to pay out to the depositors. Now that's the idea on the payout. On the premium management, we have set up portals for institutions, for each of the contributing institutions, so that you are able to upload your reports. Depositor reports should be uploaded on the system, on the payout system, and we are going also to extend the interfaces with the rest of the institutions, and then we shall be training you, showing you how to upload these reports, so that we are able to receive all your data from your core banking systems should be uploaded on the payout and premium management system, and then we shall be using that system on the side of premium management to compute premiums, as Dr. Mike has already explained. We shall be computing, the system shall be automatically computing premiums, penalties where it may be required penalties, and then the system will be sending an invoice automatically, an invoice before expiry of the 21 days. The system will be sending an invoice, billing you and informing you that this is the amount due for you to pay. So you will be required to nominate your some of your staff to be checking the system, or to be working on the communications, notifications that will be coming from the system. And I believe maybe in the first course of 1 year, we shall be running in parallel. We shall have the automated invoicing system, and then we shall also have the manual system, just to make sure that we are well acquainted with the operations of the system before we can actually cut over from manual to the automated system. I think in a brief, that is what we are working on at the moment. It's a project that we believe that will help the fund to make sure that there is efficiency in processing payments for the depositors when the time comes, and also make sure that there is efficiency in processing premiums, your payments, and your invoices, and all the communication that will be associated with the management of premiums. The system will be able to handle all of that. I think I need to end here, as Patrick had already forewarned me to be brave. Thank you so much.
Now we need to go into your side. You have listened from this team, and for us in this sector, we say communication is not effective unless there is what? Yeah. Thank you very much. With one hand at the back.
Morning team. My name is William from Bank. I have two questions. One is when the 10 million shillings you have to pay, then I think the bank closed. You've not come up to explain what happened to the difference. If, for example, you have 200 million shillings, you're giving only 10 million. From previous discussion, you said after reconciling and consolidating, give me the balance, but this time around it's not coming out very well. Number two is about government of late is borrowing money from different institutions. And if government comes direct to DPF to borrow money, will you give out that money since it is money for contributing the event to the bank close? These days, government reports are directed, so I see clarification on that. Thank you.
Just a question to Alan. In your presentation, on the way forward, you talked about something called the single customer view, but you didn't elaborate on that.
Thank you so much. Good morning. My name is Sarah Chaya from Finance Trust Bank. Two questions. I noticed that you only invest in treasury bills and bonds according to the discussion, and I'm wondering whether it's just being too risk averse or too cautious. Thirdly, are you restricted from placing this money in the banks? Is it against the law? We would take some of this and help you invest it. Thank you.
My name is Patricia Omala from EcoBank. Mine is to Alan also. Once we invest this money, are we going to be the beneficiaries, or exactly what happens to the interest that is earned?
On investment, today the newspapers we read that NSSF for a period of 10 years has earned about 73 billion in many investments. So we need to know how you are going to invest the money. Is it capital guaranteed products, or you're also going to take some risk? We need to really understand that. Second one is, we have challenges on customers giving us their alternate accounts. We know that for some reason the customers don't share it.
They don't share the alternative accounts?
Yeah, they're not coming forward.
Probably they don't understand DPF and it's for their benefit and things like that. So we need to do more to make them understand why we have this. I am hearing that a lot is happening from DPF, but I think we need to do more is what I think. The other thing is, the money is going from bank to MNOs, and from MNOs it is coming. So there must be some mechanism we should find out. When the beneficiary and the remitter is the same, we should probably, through data intelligence and data analytics, we should be able to work. For example, I'm sure banks are working on this. We are also working on it. Whenever my customer is sending money from bank to wallet at MNO, if the beneficiary is same, we are trying to capture that as a mobile money account. So we need to have some partnerships to kind of have more adherence. 2-3 years back, when Bank of Uganda and DPF asked us KYC compliance, you see all banks had low compliance at that point of time. Today, I can say DTB is 89% compliant on KYC norms, the national ID and things like that. Yeah. The balance 11% for us is all dormant accounts we're not able to reach customers. So similarly, my request to DPF would be to start tracking the performance of bank in terms of compliance. So when we start seeing the compliance, I think it will start increasing automatically, the pressure will build up. So I don't see a little bit of pressure there on us, but we are working on that. I also want to know one more thing. DPF aggressively moved in the last 3-4 years. I want to know from DPF whether are you seeing a customer opening multiple bank accounts to kind of have protection, because this is one bank, one thing. So I need to understand whether is the customer also smartly thinking and opening multiple accounts, if you have some data around that.
Thank you very much, Patrick, and thank you so much for all the questions. Mine is just to distribute amongst the team so that we have the best foot forward.
So I've noted 3 questions. They are related, but they speak about where we get our authority to invest and how that influences the decisions we make and where we place money. And of course, there was also a question on what happens to the returns we make and who owns that. Do we return that to CIs or whatever. So the business of deposit insurance is intended to be present when there is a stressful event. Question would be, when was the last time you had a stressful event? That may be a while, but the design of our operations are that we should stand ready to support the central bank as and when called upon. Yesterday we all got a communication that one of the CIs had voluntarily exited the market. That information wasn't available on Wednesday. It only came in yesterday. So imagine a situation where, had it been involuntary and the DPF is required to step in, where would you get the money? And so the way we design our investment program is to have investments that are highly liquid, that we are able to convert them from investment back to cash so that we are able to pay out depending on the situation. It could be minor, a relatively smaller institution. It could be severe, where we are dealing with a more complex institution. And so the way we organize is, it's very difficult for us to know which one is going to happen. And so we invest in such a manner, assuming the worst case. And so what we try to do is identify those financial instruments that have the characteristics that speak to liquidity or the ability to easily sell and return the money back to cash. So the question then in our minds is Umeme a highly liquid instrument? If I had Umeme and I need money in 3 days, will I have the same amount of capital or principal that I placed in? Maybe not, maybe possible. And so this is the conversation that we have. But of course, this conversation was also held at the beginning when there was the amendment of the law. And so in the law, we are given guidance on which instruments are permitted. The permitted instruments are those that qualify to be considered liquid. They should have a liquid market. It should be easy to sell, easy to buy and easy to sell. Both should be going both ways. And so what we find is that the law has given us a small subset. We can have cash, we can have some placements, we can have treasury bills, we can have treasury and treasury bonds. But in the placements, we are limited as well. We cannot place money in the same financial sector we are insuring. It wouldn't make sense, would it? We are supposed to be the backstop. And imagine you have placed money in the same institution that now you have to intervene in. Do you consider yourself a depositor or the insurer at that point? Because your money is in, so how do you get it out to pay? It's a bit tricky. And so what we have found that the easiest way for us to avoid this conflict is to have our money in the central bank. And so within the law, the requirement is that our primary accounts, our funds are actually held within the central bank. So the placements I'm talking about will be with the central bank, not CIs. So the question is, we've received today is, can we place maybe a 6-month term deposit with CIs? No, we can't. Because of the same reason I provided, we are an insurer for the financial sector. And the participant within that pool cannot hold the same money that is acting as insurance. Because if that participant had a challenge, it will create a conflict for us in our resolution. And even the law would get confused. The law gives us, in the normal company law, the cascade at resolution of a firm follows a certain cascade. Debt is higher than equity in the resolution of an entity, isn't it? And then you have other providers. Now, if we have mingled up this, the Financial Institution Act elevated us to almost number 1, number 2, or number 3. If we have mixed up and now we are appearing in 2 places, we have placed money with the CI, but we also deposit protection fund, how do you resolve that in a court of law? It's a bit confusing. So there's a rational reason why we don't place money back into the CIs to allow that separation and independence. So no, we are not able to do that. Why do we do T-bills and T-bonds then? I've mentioned this at the beginning. It's really to focus on the liquidity, the ability to convert from a financial instrument back to cash in the shortest time possible. Of course, we have long-term bonds, 20-year bonds, 15-year bonds, 10-year bonds. So the arrangement we have done is that we are able to provide these bonds as security to the central bank, and the central bank can give us cash. So we believe that what we have is still highly liquid. So we're able to get cash within 2-3 days, and we can manage any situation. So because of that, we are highly limited in the instruments we can use for investment. So we are highly focused on using what we call fixed income or bonds for investing. What happens to the investment? Who are the beneficiaries? It remains, so when you provide the premiums to the fund, it becomes an asset of the fund. And so our purpose is to grow that asset as possibly within the constraints that we've been given. So when we make investment income, it becomes part of the asset base of the fund. My colleague doctor mentioned that we tried to build a fund to cover at least 20% of protected deposits. Right now we are at about 18, but we all know that the deposits keep growing. So it's very hard to say you have enough money, because every year more people are coming through, they are earning salaries, they are saving, they are doing different decisions. But we are required to always maintain a certain level, so our investments must grow and match the growth of deposits. But we are guided that we can cover up to 20%. If we have a coverage of 20%, that is deemed adequate. Remember, the focus here is to cover the most vulnerable within the community of depositors. So the 10 million ideally give us that cover, and so we will invest in such a way that we maintain our 20% protection over the years. So the way we try to invest and calculate is to anticipate what will be the level of deposits in 5 years' time, and how much money or what's the size of the fund we should have in 5 years' time. And so our investment decisions are geared towards tracking those two things. Are we investing fast enough, and how fast are deposits, how fast are they rising? So we try to measure those two things together. So ideally, that is really the composition and the structure of our program. I hope the answers have been adequate. If there are still any other questions, I'm happy to come back and speak to them. Thank you.
The question I'm taking on is, can government borrow from the fund? And for emphasis, I'll say a big fat no. And reason being that the law provides that there are only 3 circumstances under which money can be drawn out of the fund. One is for administrative costs, which also administrative costs are capped. So you don't think that money will come out and just be used anyhow. No. Administrative costs are also capped. And then also, if the board has borrowed money in case of a payout and didn't have enough money and had to borrow money to make payment, then that money can be withdrawn from the fund. And then third and most important, it's for payout. So the law provides for only those 3 instances. Out of that, no money can be drawn from the fund.
So in a nutshell, it would be a mistake for government to borrow from the fund.
Thank you, Patrick, and my colleagues. We've got to put to the balance. Our protection limit is 10 million. Once we know that the liquidation process takes long. So for us as DPF, we guarantee the customer that we shall pay you 10 million. Internally, we've set for days to 7 to 14 days. The law gives us 90 days, but we are trying to create more confidence in the sector, and that's why we are trying to push it to 7 to 14 days. So that we can pay within that time. So the balance will depend on the end of the liquidation process and how much covered from the assets of the institution that got issued or the institution that was closed. So if we happen to get more money from the assets of the institution, then we can fully pay the balance. If we don't get enough money from the assets, then the depositor might also lose a bit of that money that was beyond 10 million. That's why we encourage depositors that keep balances beyond 10 million. You're expected to understand the financials of the bank, or you're expected to hire a professional to guide you on which bank to keep your money, to mitigate that risk of losing in case we cannot recover money to be able to pay the excess of 10 million. So this is dependent on what we recover from the assets. The other question was the single customer view. This is a project we undertook as DPF some time back, and we are still closely monitoring the progress. We issued guidelines to contributing institutions, and these guidelines required them to update depositor records to ensure that the records are updated with the national ID of the customer for individual accounts, registration number and certificate for companies, but also to update with the alternative payment method. The alternative payment method can be an alternative bank account in another financial institution, or it can be a mobile money, a mobile number. This is very critical, and it supports our payout system. Once we have this data updated, and this is very important, that when a bank closes and this data is very up to date, as DPF, we sort this data in our system, we make offsets instantly using our system, and we are able to pay within a short time, 7 to 14 days. But if this data is not updated, it means that the customer will lose. Losing meaning that he will not be paid on time. You assume a customer who provided an alternative payment as a mobile and has an AfriCell number, and then that bank closes. That will mean that that customer will not be paid within 7 to 14 days. So we shall have now to, first of all, we cannot call the customer because the AfriCell line is no longer active, and we cannot pay. So how will DPF reach the customer? Very challenging. So it means that that customer may have to first go to our agent, fill in records, and that might take some bit of time. That's why we are emphasizing update of records. It is for the benefit of the customer that in case that bank fails, we are able to pay within a very short period of time without having to contact the customer. And in our on-site inspections, as we review the records, we shall also identify certain red flags to do with the quality of the data. So if we review records and we find AfriCell numbers, smart telecom numbers, it means that those records are not complete. The compliance level you could have given us might not be accurate. Also, to give you a status of the compliance with this, the single customer view, as at March 31st, 2022, the compliance level was 86%. We had issued guidelines to ensure that by around June last year, to ensure that all institutions have a compliance of 80% and above. We still have some 7 institutions which are below 80%. We are closely following up on these institutions. We are working with Bank of Uganda to see how to handle this. We might penalize the institutions because we've kept on extending the deadline almost 2 to 3 times. So depending on our engagement with the institution and Bank of Uganda, DPF might be forced to penalize the institution. All institutions that are below 80%. So this will depend on the engagement we shall have with the concerned stakeholders.
All right, so we turn our focus to matters of public awareness. This is really going to be a snapshot presentation. You're being told by the CEO and the other presenters where DPF is located. So when you're opposite the Ministry of Health, look for this picture. Then you would have reached DPF, the role of contributing institutions. Let me put it this way. Your role is broken down into 2 aspects. There are roles that are encumbered on you by the law, and then there are roles that are operational in nature. Now, the ones that are encumbered on you by the law are those that you have no option but to do. And the further breakdown is that your roles can also be broken down in terms of the institution or at the individual level. Now, in terms of the institution, the law under Section 30, subsection 2 of the Financial Institutions Act, Deposit Protection Fund Regulations, is very specific about what is expected of you. So as I mentioned, the aspects that are enshrined in the law are not a matter of debate for you. And it is very specific. All the law says is, let your depositors be able to know about DPF by you displaying these items. But I can tell you, it is very interesting. We go around as indicated, and in the central area, it may not be too bad. But in your up-country branches, people, there is a big issue. My comms people, are you listening? You walk into a facility, yes, there is a DPF poster, but it has 6 other posters on top of it. So we only see our small purple because we know it. So as far as you're concerned, you have displayed. But is that really effective display? So someone has the poster there, and then there is a notice to staff, and then there's a notice to clients. Because of limitation of space, the display has taken place. A good lawyer will argue that I have displayed, but is that really effective? One of the roles that I think we can coordinate on as institutions in the same sector is when it comes to aspects of IT and the website. On our part as the DPF, when you go to our website, you will find that we have the logos of all the 34 contributing institutions. They are on the website of DPF. But we have taken it a notch higher, that anybody who visits the DPF website, if you clicked on the logo of Bank X, it automatically redirects you to the website of that bank. Can't you respond by also doing a similar thing on your website so that when they click on DPF, they also come to us? You scratch my back? Speaking of agreement, feedback is key. Quite frankly, the DPF, elsewhere, the jurisdictions have taken a number of years. We are just about, slightly over 5 years, from 2016, 2017. So it is in the nascent stages. And I'd like to share that the first years of the existence of DPF were largely focused on establishment of systems, staffing. That's how the rest of us, like me who is speaking, I was able to get an opportunity to enter as a staff. My department has ladies only because of issues of results and efficiency. Now you are sucking DPF into the lying curve. So we have a duty to give you feedback about some of the things that come. It's not, we're doing this because of the interest of sharing information with each other. And it's not really required of us. But when it has now hit our desk, it is also not fair to sit on it. So quietly, we find a way of letting it reach you. But when it reaches you, at least act on it. Because depositors, as you know, these are your clients. You deal with them directly. Some of them are very dangerous influencers, and they create for you problems. This Afriland case, clearly, the statement of BOU was very clear. By end of day yesterday, somebody was asking me, DPF, so are you now ready to start paying the clients of Afriland? When it was very clear in the statement, the institutions, the stakeholders are solvent, and so on and so forth. So they now say, finally DPF has people to pay. You see, people read, but believe you me, comprehension is another. And thanks to social media these days, we have all kinds of specialists in all fields. Now there are economists analyzing the banking industry in this country, arising from that incident. But it is up to you and me to see that we must also up our game and try to counter some of these things so that it doesn't get out of hand. Now, in terms of the institution, these are just some of the, like I said, snapshots that we need to have and be aware of in terms of your roles. Now, when we take it to the individual level, and this is now where it is interesting, most of you here are probably at middle level to top management level. But even as individual staff in the institutions, there is a role that becomes an extension of what you do. You know, sometimes not everything can be enlisted in your JD. But I can tell you, when those tellers of yours are interfacing with depositors, when they come to you, you are a demigod in terms of information. When the tellers walk into the depositors walk into your banks, anything that comes out of you is almost outrightly believable. So even if your primary duty is to be a teller, when the depositor now sees the DPF logo there, if we are lucky enough that is displayed at the, but this, I hear DPF, what does it mean? And then that is when the ahs and the ons start coming, because all of a sudden, one of your staff realizes, beyond unpacking it to DPF means Deposit Protection Fund, there's nothing else they can add. You see, Kwegamba, generally, this is one of the institutions I work with. This is at the individual level. We are not saying it is a duty that you must do. It is not a directive. But believe you me, when a depositor walks to your institution and you're able to satisfy their information need, you're giving them a good feeling. That is customer service. Now, on our part, we are also enjoined by law as DPF. There are things we need to do. The most obvious one, again, is the fact that we must provide this material for you. We have to ensure that at any one time when you need these posters, they are available. Section 30 of the law dictates that we have to have it. Now, as I've already mentioned, we have gone a notch higher. You come to our website, all the contributing institutions are there. We are there as DPF. We would like to support you in that. Deliberately, we also want to see how we can grow following. We would like to start following you on your social media handles. We share information. The law provides that that statement you see in red, deposit protected by the Deposit Protection Fund, must appear on your websites. They have to appear on your official stationery and print adverts. Now let us do a census. How many have on the website? That statement is supposed to appear somewhere on the website of the institution. Comms people, it is in the law. How many have it in the website? Okay, about a quarter. How many have on the official stationery? That's interesting. I expected a zero of that aspect. It is good to see that their hands up. So that means on your letterheads and so on, somewhere you have indicated deposits are protected by. The rest whose hands are not going up, I'm encouraging you to just learn from the neighbor. That sometimes we may actually be breaking the law quietly without knowing, including print adverts. These ones, when you go to the newspapers, you're putting out your financial statements, it may be a bit of a problem. So what did we find? We found that this statement, in some cases, other CIs don't have it, and others have either distorted it or it is incomplete. And then there are also people who refer to DPF wrongly. We have been called to PDF. We have gone to places where others have added a U before it. We have become UPDF. So from an awareness perspective, if you are swinging between a DPF and a PDF, which is a document in a laptop in the balance department here. So in terms of creating awareness, I think the aspect of consistency is very key. We are aware that this message itself, as provided in the law, is not entirely complete. And that's why as DPF, there is a proposal to make this message complete. It needs to read, customer deposits are protected by the Deposit Protection Fund up to 10 million. million shillings. This last part is missing in many of the adverts we're hearing. And the part of T and C, because terms and conditions are very key when it comes to matters of law. So the aspect of the 10 million shillings missing, we are giving depositors, okay, let me not say half, 3/4 of the information. The most important part is missing. So for those of you who are running these adverts on radio and the rest, I encourage you, just go back and listen and see whether you actually take off on some of these things. Because information that is not complete sometimes can create more distortion. Of course, we have received the issue of how these people, you know, these radio adverts, they count per second. These words are too many. We cannot pay for you, DPF. But wait until the alternative is when the system is collapsing and your bank is going down. Where is the costs? And just adding the 10 million at the end, that's a microsecond. If you are smart, you can negotiate it as nyongeza without having to pay. But ultimately, the key message is it is safer to have a complete information than to have half-baked information. So the communications teams, the marketing teams, would like to encourage you that one, matters of law are not for debate. It is always safe to be on the right side of the law. But secondly, let's do a self-analysis. As you go back, go and listen to your messages that are going out. Of course, we are not saying you must start off immediately. We are aware that you may have taken out the next 6 months or so of the adverts running. It is also costly to just change. Our duty is just to let you know that this would be the right direction to take, so that as you go ahead and you're reviewing the messages you're sending out, you try your best to skew towards aligning yourself with what the law requires you to do. We are on hand to support you and to work with you at any time.
My name is William Alemikenyi from BRAC Uganda Bank. I refer to the earlier presentation, and I would want to understand the regularity of updating the depositor's information. We now have a situation where many of our clients have phone numbers linked to their accounts, but every 3 months, if they do not use those phone numbers, we find that those numbers are given out by the telcos. And that certainly has an implication on the data that we provide to DPF. Is there a need for us to try to harmonize a number of these developments in the industry to also ensure that our work is made easier? We want to comply, but sometimes you find the circumstances are changing so much that you are on the wrong side of the law. So I wanted to get feedback in that direction. Thank you.
My name is Abdul Victor Nabongo. I work with Housing Finance Bank. My question will border around the diaspora customers. We have had quite an engagement on this, but from the communication side, you will notice that when the deadlines for updating information were drawing nearer, the diaspora teams got worried, and banks had to come in to correct the misinformation. But from the DPF side, what is the strategy in terms of reaching out to these people to educate them about the fund and how it protects them? Because we have a bit of investment and funds that come from that side. And the other challenge is that they don't have national IDs. Some have taken dual citizenship. So they need to know what options do they have in terms of what information they provide the contributing institutions. The other is, of course, I think this is just an appeal that we start having engagement with NIRA in terms of the expire of the national IDs in 2024, because a percentage are going to expire. And when you look at the passport side, when a passport expires, you get a new number. So we have provided information. If the national ID is going to take the same format, that once it expires, you get a new number, then we might have to redo this whole work that we have done for quite some time to reach the levels we are at. So we think from the institutions, we will continue to engage, but we also hope that DPF as a government agency should also be able to engage on those two aspects. Thank you.
Julia Mukwa from Mercantile again. This is my request to CEO DPF. in regard to the NIN. I would request that we have, to the NIN, I would request we have a discussion between NIRA, DPF, Bank of Uganda, FIA, and UBA. The reason being is some customers have applied for national IDs and they're not coming out. Now, what does it mean for us that we cannot open up such accounts? Because there's a directive, don't open up the account without national IDs. That's number. Number two, there are customers also who have accounts with us, but they don't have national IDs. Now the question is, should we close those accounts? Then number two is to request again the issue of proposal to penalize banks that have not complied with 80%. Based on the first question, I would request not to penalize them. Thank you.
Thank you so much. My name is Sarah Kacharia, Finance Trust. I'm concerned about protection of depositors in case of voluntary liquidation. Whereas DPF comes in when there is involuntary liquidation, what happens if someone voluntarily liquidates but is unable to pay the depositors? Who is protecting me, a depositor, if someone has decided to volunteer?
Okay, I'm called Rachel Nantong from Finance Trust Bank. My question also goes to customers operating accounts, but they are unable to get national IDs. We were at one time maybe thinking of freezing their accounts because also we want to avoid a penalty from DPF. So we want your advice. Can we proceed to freeze their accounts?
Thank you, moderator. My name is Ronnie, and I'm from I&M Bank, Uganda. My concern is around the statement, the DPF statement. I know all banks have already been incorporating the statement on all adverts. You have mentioned that we need to adjust the statement and include the 10 million, the limit of 10 million. And from a communications perspective, I know this is the right thing that we should do, but there's a worry that our customers will, especially those who deposit more than 10 million, will kind of freak out and want to take away their money because we're saying we are protected up to 10 million. Is there a plan, like an awareness plan to manage the crisis that may arise as a result of that? Thank you.
Mine is, I want to know your opinion on the proposed increase in paid-up capital requirements, given the fact that maybe the impact of implementation of this regulation may have a spillover effect to you. And then if I got it right, you indicated earlier, okay, you're saying that 98% of accounts are protected, yet you also say that currently you can pay up to 1.5 trillion out of the 5. So my question here is, worst case scenario from a risk point of view, what is your contingency? I mean, you can pay 1.5 out of 5 trillion. So worst case scenario of implementation of the minimum capital requirements, what's your contingency plan?
My name is Bob Paul from Pride Microfinance. My question is to do with the actual protection limit. I know we arrived at it scientifically, and we are looking at protecting the vulnerable. However, when we say we are building confidence in the sector, in Pride we deal with a number of not so educated individuals who indeed have this money. Now, if we are saying that we're building confidence in them, to a man downtown who has his 300 million, and we're telling him that, yes, give it to us, but we are protecting you up to 10. This is not an elite person like any of us who will go and look at the financials. They don't even have time to look at them. So if you're telling them that they have to go and study the financials, I think we need to relook at that limit. Probably look at 50 or 100, despite the fact that we arrived at the 10 scientifically, and the fact that we want to build confidence. In my view, with that segment, which is actually moving our economy, and we want those deposits in the banks or the MDIs, I don't think the 10 million actually builds the confidence. Thank you.
Gilbert Nsanya from Bank of Africa. I think as we update the customer information, one of the biggest challenges we have had is on dormant accounts. And a number of these we have actually failed to get the clients. And it's only until 10 years that we can actually deal away with these accounts. So we really need some bit of confidence or guidance on the same, since many of these are actually contributing to our failure to get to maybe 80%. Thanks.
Well, I'm Eric Senyonga, Finance Trust Bank. Incidentally, he did ask what I wanted to ask about dormant accounts. We don't seem to understand the rationale of including them in the records completed, yet we are unable to get the clients. You advertise, they never turn up. So it's like it's an intentional action for DPF to penalize you, to penalize you for something you can't correct.
Thank you very much for the questions, and thank you, Patrick. Yes, we are signing so that we give you the correct answers, and we put our strengths to bear. What strategy do we have to create awareness? Yes, we plan, the diaspora has certain conferences it has, like the, I think, North American conference. We want to start attending those so that we keep them also aware of what happens here at the DPF. But we also understand that a number of them are dual citizens, so they might not have, they could have registered their accounts in foreign passports, and yet you want the national ID. So now it's a choice for them. Remember that we're not going not to pay them because they don't have the national ID. It's only that will take longer to pay them. So that is what they need to know. And then they can now balance and see where's the risk and where they're going to put the efforts when it comes to that eventuality if the bank actually fails. So the decision is theirs, and some of those are the reasons why we didn't say 100% compliance, because we knew there are those circumstances which make it very difficult to have 100%. That is embedded within that aspect. But give them the opportunity. Don't scare them that they'll not be paid, but tell them it might take a bit longer. And if they want to be paid faster, then they need to give us that information. The IDs expiring, I think that's a very good point. We shall go back and find a way of interacting with NIRA to see how we can bring that to their attention. But I also want to say that even for the customers who don't have the national ID, it is okay to use the letters, because the letters give you their NIN. The only thing is to try to follow them up to get the actual ID. So we gave that communication at a certain point. And then what to do if the ID is not there and the NIN is not there. I know some of the banks have stopped customers from withdrawing from the ATMs and has forced a lot of customers to come in. Now we are not going to say freeze the accounts. No, you're the ones to come up with the best strategies that work for your clientele. But I want to say that all the banks have come up with various strategies and they're working. And that's why, like my colleague says, most of the banks are above 80%, but we worry about the 7 banks that are below. Maybe you need to borrow a leaf from the others and see how they're going about it, because this is still the Ugandan customer base. What could be too different with what you're facing and what your colleague is facing? There are a number of possibilities for institutions to get merged, to be acquired. Others might go down the tier. So if you're in tier 1, you might go into tier 2. Others can opt for voluntary liquidation. And my colleague Angela is going to ask the concern surrounding voluntary liquidation. So for us as DPF, we've also taken keen interest, and the central bank has assured us not to worry, just continue doing the work as we have been doing.
Thank you, CEO. When we talk about voluntary liquidation, you opt to come out of the trade that you are doing voluntarily.
Now, what happens when you're dealing with voluntary liquidation is that you do have the assets within the trade that you're doing that are able to cover the areas that you want. So you hand it over to someone, or you do it yourself in a way that you are able to manage your datas. So we have two recent areas of liquidation. We've had AfriCell and we've had Afriland. Interesting, the names sound similar, but I don't know what the coincidence is. But with Afriland, and Bank of Uganda has put the rider at the bottom, there is enough money to pay the depositors. So there is no cause for alarm, and that's why they've gone voluntarily into it. AfriCell, similarly, when they opted to move out of the market, why are we talking about AfriCell? Allow me to just mention that the service providers, now the telecom service providers, for part of the work that they do, they are required to keep, there's that new law that regulates, that provides that they should keep their relationship with the Bank of Uganda in terms of monies held. So the money was just transferred from their account onto another account, and all the persons who had dues in terms of money from AfriCell, they were covered. Now you've not had any storm arising out of that. That was done, all done voluntarily. Now when it is not voluntarily done, you have the issue where the Bank of Uganda is forced to go in or appoint a liquidator. They have looked at the books, they realize there's a challenge here. And whatever they are trying to work out is not matching up. So they'll go in and appoint someone to take over and run the business of that company and ensure that all the creditors and debtors are sorted through the liquidation process. They look at all the assets that you have and say, okay, fine, let's pay this, and pay that. From that, you are able to, they liquidate the assets, and then you are able to pay the creditors and get money from the debtors, and then you arrange them in order of precedence for payment.
There was one question, customers having numbers which they submit as part of the depositor records, and then later on the numbers are not in use and they are deactivated by the telecom company. Of course, this is a challenge we acknowledge, but it doesn't take away the fact that on our side, once the number is not accurate, we cannot pay. So it will delay the process. So we appreciate it's a challenge, but as an institution, as a contributing institution, you need to continuously engage the customers, do quality assurance on your data. Do quality assurance on your data to ensure that the data you have is correct. In the unlikely event of a bank failing, we can rely on that data to pay. Otherwise, if we just sit back and we just say, no, the customers keep changing their numbers, definitely it impacts on us when it comes to a payout. So it's a challenge, but we just need to work together, continuously engage the customers. When a customer comes to the banking hall, ask the customer, have you updated your records? Is your number accurate? Are you still using this number? So it can be something that can be enforced at the banking halls to ensure that customers are continuously engaged to confirm that their records in the database are still accurate, and also share with them the benefit. What is the benefit of having accurate data? In the event this happened, you can always be paid by DPF within a very short period of time. So data assurance and the quality check you do internally can help to try to solve this problem to some extent. How does the 10 million create confidence in the sector? And then there was an issue to do study the financials. Yeah, the 10 million honestly creates confidence, because if you look at our numbers, 98% of the accounts have balances 10 and below. And 93, as of our statistics for March, have balances of 1 million and below. 93% of accounts are 1 million and below, and 98 are 10 and below. So you can see that the other 2%, these are majorly institutions that have very huge balances. An institution is able to hire a professional to guide them on which bank to keep their money. And even somebody that keeps a lot of money, majority of the people that keep huge balances are able to engage a professional to guide them on which bank to keep their money. Because these are institutions and a few individuals. So honestly, the 10 million might seem small, but the reality is it creates confidence in the sector. There was a question on contingency plan. Our fund size currently is around 1.05 trillion against the value of protected deposits of around 5.7 trillion. So here we are looking at all banks in the sector. If you try to reason theoretically, it's quite, of course, hard for all the banks to fail at the same time. It's practically impossible. But also, based on the international standards, the international deposit insurance standards require that a deposit insurer should find an alternative source of funding if its fund size is not adequate to meet all the protected deposits. So currently our fund size is not adequate to meet all the protected deposits. So as a fund, we are looking for backstop funding. We are trying to enter into a borrowing arrangement with the government of Uganda to cover up the gap. So that is the contingency arrangement. That in the unlikely event that all the banks in Uganda theoretically collapsed at the same time, and our fund size is only around 1.05 trillion, we could maybe get the balance or the backstop funding from government of Uganda. So we are trying to enter into that arrangement. Government is also trading carefully because, you know, the government debt is high. So they also, it's not a simple process, but we started on it and we are pursuing it because it's a requirement based on the international deposit insurance standards. Yeah, so that addresses the contingency funding bit of it. On dormant accounts, still we encourage you to continue looking out for these customers. We appreciate it's a challenge. But on our side, remember when a bank collapses, we have to pay all the deposit balances. Whether the account was dormant or not, as long as it had a balance, we are supposed to pay. So that's why as DPF, we continue encouraging you. Try to look out for these customers. You can take mechanisms that are legal as a bank. I will not say close all the dormant accounts. I'm sure there's a procedure of closing them. So try to take mechanisms that are legal, but the most prudent way, which is also challenging, is to try to continuously look out for them. Thank you.
Thank you very much. The doctor has said it all. I just wanted to say the part of asking customers to update their records. The bank should also be very active while we also do the same, asking them to update. You also need to keep reminding them to keep updating as long as any of their information changes. So we have to partner in this, having those updated. Then yes, the 10 million, yes, is sufficient, and that is the role of DPF to protect the small and the unsophisticated. And deposit insurance does that because you're trying to avoid the risks of moral hazard, where you're protecting a large percentage of the deposits in the sector, and so the players in the sector can be reckless. After all, if anything happens, they'll just pack their bags and the country is going to look for the money. That is why we are encouraged to only protect around 20% of the total deposits in the sector. And that, according to the studies, according to IADI studies, creates confidence That is confidence in the sector. Now, if someone, an individual wants to have confidence, that's where they have to have confidence in their bank. So there are two things: confidence in the whole sector, where the 10 million is enough. And then confidence that each of you has to have in your bank is where the KYB comes, know your bank, so that you're confident in your bank. So we need to separate those two things. So I think we leave now Patrick to tackle the question on if we have that statement of only up to 10 million, isn't it going to freak out the public?
We had some very good engagement with NIRA in the last maybe 30, 45 days, where some of the questions which came here were all answered there. And unfortunately at that forum, I think it was held in UCC Buglobi, the participation from the bank was all the banks was very less, and they took lots and lots and lots of questions from the bank, and they also answered, and they took all the suggestions. Somebody here asked, I don't know whether that bank participated on that or not. Did you participate on that? I think you participated. What they said about the NIN was, the NIN is for lifetime. The NIN never changes, okay? That's something that they said. And from August 2023 onwards, they are doing a parish level renewal process across the country. So the banks, they said, need not worry about, as long as their customer has a NIN, even if it has expired, they will be replacing them to the process and updating their sites. And because now the banks has connectivity with the NIRA site, we should pull the data, the new expiry dates, and update our records. That is what they said. So the banks, they don't need to worry is what they said. Second, somebody asked a question saying that a customer's a dormant account, let's take a dormant account. The customer applied for a NIN 2-3 years back, he or she didn't get the NIN. But when such customers come to us, what we are saying is, go to NIRA, and I think there is a fees of 1,000 shilling or something like that. They come back with the letter and the NIN with the date of birth and all that. What we are doing at DTB is, with that letter, sometimes the customer has a passport, we have the NIN, and I also understand as per law, in 90 days we are supposed to get the national ID card, but they're not able to meet that expectations, but they are saying they are working on it. So we take the letter, we take the passport, and then we activate. So there are many mechanisms that we can follow, but there are some customers who said, I have not applied for NIN, I am not going to apply for NIN. There are some customers also like that. So for them we say, unfortunately, we will not be able to service you, and we've requested some accounts to be closed. The other very good element is, if you are over 80% of your KYC requirements, in some cases where the customer says, I am going to apply for NIN, we have accepted passports also to see that even though we are compliant, we need to support the customer to have an account. We've done many things like that. So banks can have their own different mechanisms to kind of manage it, like you mentioned. And I think NIRA is working very well to sort out most of this problem, is what I'm thinking about. And there are 17 million people who have not applied for national ID now. So for them, from January 2023 till July, August, they're going to do multiple visits to Paris to cover up, is what we were told. So that meeting was extremely good. And after that, there was a beautiful article also in one of the newspapers in the last 15-20 days. That is exactly what was there discussed in that particular. So if people see that, it will be very good information for them to see how to progress in the future. Yeah, thank you.
Thank you very much for sharing. I think the implication is that there is information that we can pick from each other as well. All right, dear colleagues, it's a few minutes, it's actually 1 hour. And yet the discussion seems to be very... All right, let me take those two. Because it seems to be enriching the discussion. Then we'll take the one at the corner, and then we can move to the round. Yes, go ahead.
Thank you. CEO DPF, don't get ahead of me. The interaction you're talking about, the issue of using the NIN to open up the account, we requested NIRA to guide us. Because Bank of Uganda and NIRA came and advised all banks to have a system where you can validate national IDs. When you validate a national ID, you use a NIN and a card number. So we requested NIRA director to advise whether they can use the letter which has a NIN to open up the account versus the NIN system they had put in place. He said, and I quote, "We'll get back to you." Now, DPF CEO, you're advising us to use that letter. But the reason why it's still pending, again, it will go back to my request that if we meet all stakeholders to try to tackle such issues, I think we'll be able to serve our customers better. Thank you.
Thank you very much, Francis Chibuka, Diamond Trust. I was just thinking about 2 points. One is on the national IDs and the mobile phone numbers. If certain people are not able to get the national IDs and or the mobile money numbers keep changing, maybe we could think about for that population which is paying NSSF, which is contributing to NSSF. If a bank goes into liquidation, can we transfer money from that bank or for those customers into their NSSF? That's just a wild thought, that you may not have the mobile money, but we can transfer your money to your NSSF. You could have actually been deceased and the bank hasn't yet picked it up. But that money could go there. And then once the letters of administration and all those things are done, then the family can pick the NSSF with your money in it. That's one. Two, the good doctor there mentioned about risk management. It's very unlikely that all the banks can collapse at the same time. But in case of the credit crunch that happened in 2008, banks could fail simultaneously. But that means the economy is also collapsing. So will the government be a suitable alternative? Because then the government is also collapsing at that point in time. So maybe we may need to think about a better alternative than going to the government, which is also collapsing. Thank you.
The one of the NIN and the card number. For us at the DPF, we're interested in the NIN. That's why for the DPF, as long as the NIN is there, we don't mind about the card. But NIRA probably has another mandate and requires the card. So the comfort we're giving you is that when we come to inspect, if you have a NIN number and you have the letter, we shall not say it's not compliant.
The reason why they want us to validate the NINs, remember those NINs are, we have a NASA down there. So they bring them and you think it's correct, yet it's wrong. So that's why we validate them, to make sure that what we have in the bank, it's what we NIRA have in compliance with customer due diligence and enhanced customer due diligence. So that's why there is an issue there.
Okay, so to verify, you need the card. Is the card number? Oh, okay. That is where it becomes tricky. And so therefore, you'll really need to work with NIRA to make sure that your depositors are getting those cards also. But the assurance that I'm telling you, at least at this stage, we shall not say that it's non-compliant, because we know the challenge that we have. We shall take it to be the correct NIN, as long as the letter is there and it's verified by the NIRA office. There was the issue of NSSF. If you know what, as long as the customer says that if the bank closes, send to my NSSF account, and they give us the details, we can't refuse as long as we can match. There needs to be the matching between what the bank has and what NSSF has. So for us, we can pay wherever the depositor says we pay, but we just need to confirm at the end of the day that the records are matching, and we shall pay.
There are twofold where you said you levy 0.2 of your annual average deposit, and then the risk-weighted adjusted premiums that come in. So this can only help you to protect customers who have deposits of below 10 million. And I said strategically there are banks that are targeting corporate and small medium enterprises whose customers may not be protected by the 10 million. So I was trying to give a food for thought that can we enhance the way of building up the deposit protection fund by taking into consideration the structure of the deposits that these several banks are holding, given that their strategic intents
are also somehow different, such that even the big customers, the corporate and SMEs, which can be the target market for some of these banks, can also be protected and benefit from the Deposit Protection Fund.
Okay, so are you suggesting that maybe the banks that target corporates should pay more premiums? I mean, we should have a different insurance limit for them?
Yeah.
And therefore they'll pay more premiums?
Yeah, that's what I'm thinking.
Okay. Now, that would be okay, but let us not forget the purpose of deposit insurance is to protect the small and sophisticated depositor. Generally, the corporates have finance departments who are analyzing all these performance of the whole sector. So for them, they are not the unsophisticated, they are not even the small ones. Now, the big banks also say, why should we be paying the same premium as small banks? And yet for us, we are big and we're even performing well. But we tell them that sometimes one small bank can fail and it affects the confidence even your depositors have in your bank, because they say if that one failed, maybe even mine is about to fail. Sometimes there's a contagion effect, and that's what we explain. We all have to be in this together. So we all need to contribute so that if one of us has a problem, they are sorted out very fast before it spills into the whole sector. It becomes a systemic banking issue. And that's why in all jurisdictions where there's deposit protection, all of them pay the same premium, especially the annual premium. Then adjustments are made for your performance, because if you're risky, that means there are higher chances that we might have to pay. So for all jurisdictions, they'll pay 1% for annual premium, and then they'll have a different amount for the risk adjusted, because you have to present a united front. You're all playing in the same sector. You all have to protect the same sector.
What happens in the event that we have maybe a force majeure or an extreme market turmoil? Because ideally, where we stand as a financial sector, we would be evaluating that situation differently. Of course, it may be coming from the political side and then spilling over. We are looking at the situation of Uganda, I say, in between 81 and 86, where even coming to office for staff of banks may be difficult. So in that situation, if we were to experience the events of 85, 86 again, one of the things for me I note from our history is that even when we went to war in Uganda, the central bank remained in existence, and most institutions remain in existence. And the thing we highlighted is that our accounts are held at the central bank, and most of our operations are with the central bank. So if we are to just look at that event, the situation, the conditions that Uganda had between 81 and 86, as a benchmark, as a barometer, we see that still there is likely to be a central bank, regardless of the change of leadership of the country. And so that gives us some bit of comfort. And that's the reason why we have all our operations within the central bank. But hypothetically, let's maybe just stretch it a little bit, borrowing from what we see in Ukraine. What if we had a more extreme event like what we are seeing in Ukraine? What would be, how would we go about it? They are really extreme. They are hypothetical. Of course, we spend time to also look at that information and see what are they doing differently in Ukraine to move forward. So what we can borrow from there is we see a number of solutions that are coming through after the Ukraine and the war in Russia's invasion of Ukraine. We are seeing some solutions. One of the things that is coming forward is that donors are stepping in to provide support, because the systems are broken in Ukraine, and so the situation that we are mentioning would be very, very similar. So donors would organize conferences to support different activities. So if we are using Ukraine as an example, there's a donor group that is responsible for supporting and kickstarting the financial sector. So because the value of the currency has plummeted, some banks' buildings have been destroyed, some assets have been ransacked and valuables taken away. So we are seeing that the external sector becomes very key in restarting the economy. And so this is the reason why we are in the associations like EAD, and we are working with the IMF as well, because that gives us that external leg that can come in when everything has collapsed. So that is one point that we can anchor on. The second one would be a more market-oriented approach. This is something that we are just toying with. It's not policy, it's not something we have done, but we are speaking to some larger insurance companies. These are reinsurance at a continental and global level. They have larger balance sheets, and we are exploring the possibility of paying for reinsurance for our financial sector. It is a concept that is coming through, but no major deposit insurance scheme has been able to take it up, because insuring a sector is a large undertaking, and of course looking for a party who can bankroll over $300 million can be a very big premium on our side. So we are discussing with the World Bank to see how best do we craft more market-oriented solutions that can help us have an external but market-oriented solution to support the system. Beyond that, another hypothetical that we experiment with and we are thinking about in the event of a very extreme event is we may have to externalize and invest outside our borders. Again, this is also a last resort activity. But in the event that our own jurisdiction is under pressure, it may make sense to domicile our assets in another country. So for example, we may have investments sitting in the United States or in London, away from the situation. So ordinarily, this is the approach that central banks do when they are managing their foreign reserves, and it's something we can borrow from in the event that we have such an extreme event. So there are some possible ways we can restart and manage the situation. And of course, we spend a lot of time on surveillance, trying to understand the conditions we are working in. If our red flags show that there is something happening, of course, all these become some things we can discuss with our partners and the board. Thank you very much.
And just to bring in the legal perspective, you cannot operate government in a vacuum away from the laws. So we have a good scenario. If we looked at what has been happening, any government that has to go over and take over another government, you have to justify your presence. And you justify your presence by making yourself legit. And because you don't even just take over, there are many things that tie down governments. We are governed by both national, regional, and international laws. So all that has to come into play. There's a lot of dynamic around the legal basis of a government that you don't just come and override a government. So whatever happens, there are things like you find that many governments have changed over the years, but we are still bound by agreements that were made in the colonial days relating to the waters that flow out of the Nile up to today. So some of those things do not change. So legally, there are certain things that will not change. So you have to look at every situation to make it legit or have its legal basis there. So no government can come in place and is not legitimate. It would have to create a legitimacy and when it creates a legitimacy, there are international, regional, and national laws and agreements and things that have been done that have to continue in place.
How long are we going to take to reach the 20%? Of course, we can project and say, for example, 2 to 3 years or 1 to 2, but also this is affected by parameters like the growth in deposits. Because once the deposits grow very fast and the fund size is not growing as fast as the deposits, so definitely this will stagnate the number. I'll give you an example. In December 2020, the number was 14.8 compared to the benchmark of 20. In December 2021, the number was 18.4%. And you can see that still in March 2022, the number is 18.4. Somebody would argue that if in December 2020 it was 14.8, and 2021 December it was 18.4, so it increased by 2%, maybe in December it might reach 20. So that can be a projection. But this is definitely affected by the growth in deposits and also how our fund size is growing. Yeah, thank you.
Doctor has put it very well, but we think that within the next 4 or 5 years we should have reached the 20%, but subject to the fundamentals that are existing. Before I come to make my closing remarks, I just wanted to say that when we start clamoring for an increase in this deposit insurance limit to 50 million, for example, 5 times what it is, then the sector has to be ready to also increase premium contributions 5 times, because we have to pay, and to pay we have to get from our coffers. And that's why it's important for us to know that deposit insurance is for the small and sophisticated depositors, because we can't afford to cover 100 million, let's say, or some people say, why don't you say you're going to cover 50% of my deposits? That's a lot of money. So when we look at our fund size and we do the projections, we just need more money coming into the fund. So we have to always balance that. There's a moral hazard, but then there's the expense on you, the financial sector, additional expense. And remembering always that it's for the small and sophisticated. So we have to keep educating the public that know your bank, know your bank. And I know the banks maybe that are not performing very well can be scared. But you see, that is how it is. So you have to find a way of improving your performance. Otherwise, the sector might end up pushing you out. Because if all the customers become aware, they'll start withdrawing their deposits from your bank. So now is the time to put everything right, so that as people get aware that they're supposed to know their bank and they want to know you, your financials are not bad. Thank you, moderator. I submit.
I think if we were to take the direction of keep escalating, we will be having a discussion of from 10 billion, can we consider 5? Because ultimately, you know the source. But let me also add that the hunger I was talking about may not have been necessarily for food. I'm hungry for more interaction of this nature. And I'm also hungry that we have to work within our set targets. When we say we'll stop at 1, I'm sure some of you put in place contingencies for how you spend your afternoon. So ladies and gentlemen, in all fairness, I think we need to come to a wrap. This has been something that I'll leave for my CEO to mention. On that note, Madam, I invite you to come and make your closing remarks, after which I'll just share with you. Well, let me do it now as you come, basically administratively. After the remarks from the CEO, I'll request that you please join us here for the group photo. Finance people, you know accountability. I need to put in my calendar for next year, this photo. The camera team will set up the place very quickly, and then you'll get your lunch coupons, we will have lunch.
And secondly, for engaging and asking us numerous questions and even coming up with solutions. For me, I have learned a lot from you, and what I'm taking back is that we really need to engage with other participants in the banking sector, or those who affect us in any way. I think me and the team are going back with lessons learned, and we have to find a way of discussing with entities like NIRA. NIRA is coming up with this integration of most of the government agencies, so that maybe at a certain point T, we might not be asking the customers to give you their names. We can just enter into the NIRA database and be able to extract that information and use that information to pay. Indeed, that's what the developed countries do. But because we're not yet there, we're saying at least ask them to give us the information so that in the worst case scenario, we're able to start paying a number of customers as we're calling the others to come physically to the branch. You'll all agree with me that when a bank is closed, there's a lot of panic. But if after a few weeks, you're able to say, if you gave us your mobile number and it's the correct number registered, we're going to start paying tomorrow. That calms down everybody. And those who haven't given will now start thinking of coming. Imagine a scenario where a bank is closed and now you're starting to ask depositors to bring that information. How are we going to account to Parliament? Because those are issues that can easily start bringing up. Of course, they'll say that you knew that we're now using mobile money. Couldn't you get most of this information before? So the information we get will not be 100% complete, but at least it's going to help us manage this payout process. And that is why we're encouraging you, even regardless of the difficulties that you're facing, do not give up. Continue finding ways of getting this customer information updated. Of course, the issue of continuous engagement, this is unfortunately one that we are having, the second one since 2019, which has been a long time. Of course, the responsibility is on me and my team to ensure that we have more of these engagements and probably even have more participation. We also want to go up country to your branches to be able to share this same information. And also very important is for you to share with the depositors the facts. And I keep giving this scenario. One time we went for public awareness in a market there in Ginger. And for that public awareness, we had also called the contributing institutions and they had their tents. So as we explained to the market people about deposit insurance, a lot of them went and opened their accounts. Very simple looking people, they unsophisticated as you would say, but they were able to open their accounts. So if we give them the right information, remember that the bulk of your deposits are held by the small depositors, isn't it? Most generally in the sector, in any banking sector, the small depositors that control the larger percentage. Then you have a few of the big depositors that you assume are supposed to be sophisticated and they should be knowing their banks. So, ladies and gentlemen, I'd also like to thank my team here at the Expo who have been able to deliver it. All of them have a lot of targets. By the way, it's not only the commercial banks or the financial sector that have targets, even as we have targets. Even if it is not growing the deposit base, we have targets to grow the fund. We have targets to carry out public awareness. So all of them are here with lots of targets, but that they put their time aside to come and share with us. For me as the CEO, I'm very grateful. I'm very grateful to the comms team and the IT team. I would like you to stand up so that the members can recognize you. You have done a good job organizing this engagement. We have Andrew, we have Betty, we have Maria, we have Albert, we have Juliet, we have Esther, we have Eka. Who else? Nicholas and Jude. So thank you guys for doing a good job. I'd also like to thank the hotel. I think we will all agree that we've enjoyed the food. The breakfast was really good. The tea was not very different. And now we're looking forward to an even better lunch. So ladies and gentlemen, with those few words, I'd like to once again thank you and encourage all of us to keep working together so that we can instill confidence in the financial sector, and at the end of the day, we're able to record even higher profits than we're recording now. I thank you very much and I declare this engagement closed.